everyone, and welcome to our YouTube channel, Moneyline with Nancy at TV. In case you're not a subscriber yet, please do subscribe. Just press the subscribe button as well as turn on the notification bell so that you can get notifications when we upload our videos. Don't also forget to subscribe and join, follow, like our other social media platforms. Of course, you're seeing it right about now. Don't also forget to share this video across your platforms. Enjoy the video. All right, welcome back. I'm being joined now by Dr. Yemi Kale, the Group Chief Economist and Managing Director of Research at Afreximbank. Dr. Kale, of course, is a name that needs no introduction, at least if you've been in Nigeria in the last few years. In economic circles, he's the former statistician general of Nigeria and one of the continent's most respected voices now on data-driven policy making. At Afreximbank, he leads cutting-edge research and economic intelligence that helps shape trade and investment policies across Africa. He joins me right now to shed light on the African Trade Report 2025, its implications for trade finance, industrialization, and inter-African trade commerce, as well as Africa's position in a changing global financial architecture. Dr. Kale, welcome to the program. Good morning.
Good morning, Nancy. Nice to see you again, and thank you for inviting me.
Nice to see you after how many years, my friend? I know I have to sneak you away. You've just got to sneak away a few minutes to join me here. The meetings are ongoing now. Of course, after the program, I would also be there to join all of you. So welcome to the program, Dr. Kale. We have a lot to discuss. Let's get started. Let's begin with the big picture. Dr. Kale, are you still there? Can you see me?
I can't see you any longer, but I can hear you
clearly.
Okay,
okay, I can see you now. Okay, let's begin with the big picture. The 2025 report, of course, there were two reports that were launched yesterday. You did analyze those reports yesterday at the beginning of the meetings. And when you sent me the report, I think, was it 3 days ago or 4 days ago you sent me the report? So I tried to read it. And the report opens by positioning Africa, as at a pivotal juncture of fragmenting global economy. In your view, what are the most consequential shifts in global trade architecture currently shaping Africa's economic trajectory?
Thank you, Nancy. I would say that my perspective of the most consequential shifts, they would include the reconfiguration of global supply chains. We are seeing things like friendshoring, resurgent protectionism. For example, the new tariffs that were introduced by the U.S. Currently, the effective tariff rate in the U.S. is 14.5%. Also, the decline in multilateralism. So I think these shifts are redefining the way global trade operates, how supply chain is also configuration supply chain geographies is pulling Africa into new, and the process pulling Africa into new geopolitical trade corridors, particularly with Asia and the Gulf. So in other words, it's really because the world is becoming more divided in how countries trade with each other. So big countries are putting up more trade barriers, and they're choosing who to do business with based on politics. So that it just essentially means that the African continent has to rethink who it trades with and how. We have to now start building stronger trade relationships within the continent, so as to make sure that we are not left behind in this evolving global trade scenario.
How deliberate is the title and framing of this report, African Trade in a Changing Global Financial Architecture? And what message, essentially, are you signaling? When I mean you, the Afreximbank, is Afreximbank signaling about Africa's current and future positioning in global commerce?
Okay, like I said yesterday during my presentation at the launch, the purpose of this report is not just to tell us what has been happening, it's also to provide a roadmap for African countries. So the title, when we set the themes of each of these reports, we look at what is currently going on in the global and African macroeconomic environment, and we select a theme as a result of that. So the title is both deliberate and it's both urgent. It's essentially reflecting the fundamental truth that Africa's trade outcomes are no longer determined by conventional economics alone, but by structural shifts in finance, structural shifts in geopolitics and technology. So it signals our intention at Afreximbank to anchor African trade development in this new suggested new Africa-led architecture, which is rooted in financial sovereignty, regional integration, and resilience to external shocks. So because the rules of global trade and finance are changing fast, and Africa needs to respond, the selected theme for the report shows that we are thinking ahead about how Africa can lead, not follow, in for our people and our economies.
The report noted that global GDP growth will decline from 3.3% in 2024 to 2.8% in 2025. How will this global slowdown, coupled with rising tariffs, we have, of course, trade tensions still there, impact African countries differently based on, I would say, their trade structure as well as resource dependency?
I think that countries that mainly sell raw material, which is largely countries in Africa, they are more likely to feel the pain more because they are vulnerable to possibilities of price shocks and most likely price dropping. But I think those that are able to grow their industries or trade more, to grow their industry and trade more, particularly with other African countries, might do better. So I guess it will depend on the effects will depend on how each country's economy is built.
So are you saying that different African countries would have different ways of dealing with these current situations?
Yes, because their economies are largely different. They have different sectors that drive their economies. They have different priorities. They have slightly different policies. So depending on the competitive advantages or comparative advantages of each country and each region, depending on what they produce. For example, in the current the escalating trade wars, countries like Ghana, because they produce gold, are benefiting. If the current war between Israel and Palestine leads to an increase in oil prices, Nigeria, Libya might benefit if oil prices go up. At the same time, countries like Egypt that depend heavily on importation of petrol to run their factories and industries will also be hit. So it depends on the way it depends on the structure of the particular African country, how they are set up as. So they will have different. They will face different impacts. Some might benefit from the development, and others might actually struggle as a result of it.
Is there a denominator across African countries? Because I clearly understand what you're saying. For Nigeria, for example, we have oil, Ghana has gold and cocoa, Ivory Coast has cocoa, Botswana has diamonds and all of that. But is there a denominator across African countries that can make us susceptible?
Um, to
Our
well,
currencies, for example?
yes, that's what I said. So indirectly, um, we are very susceptible to challenges in the global economy more indirectly. Linking, for example, many African countries have high debt levels. High debt levels means that when there's a global shock, if interest rates go up, then there's a significantly higher burden in terms of debt repayment, and that cuts across all African countries. And again, as a result, their exchange rates regimes are also very vulnerable when this happens. So that's something that cuts across African countries in terms of risks. But at the same time, there's also something that cuts across in terms of benefits. Our population, our very young population, the technology drive cuts across Africa. Africa in general has a very young population. That's a plus. You can also say we are a solution continent, even though we are still exporters of primarily raw materials. Those raw materials are critical across the continent and are very important in the industrial systems of many of the more advanced countries. And again, that also gives us an advantage. You see, for example, between the battle between the US and China, both of them are beginning to look to try and cut African countries. The US is looking to get minerals from these raw materials, speaking to African countries. China also recently is removed all tariffs from African countries. So there are a lot of similarities that work into the benefit of African countries. And again, of course, there are also similarities that make them all very vulnerable. Like I mentioned, the exchange rate, in the exchange rate, the ability to keep the exchange rate stable, as well as most of the African countries have significantly high debt levels, which makes them vulnerable to these shocks.
If we take a look at from what you're saying right now, because Africa still, you know, goes through a lot of ups and downs as a result of what's happening globally. We're having what we're seeing now. We're having weakening multilateralism. We're having also a fractured trade governance. What new coalitions do you think, or trade blocs perhaps, do you think that Africa should be engaging with more deliberately? Yesterday, the Prime Minister of St. Kitts and Nevis was there, did a keynote and did mention something that was key. He did say that, of course, the Caribbean is now like the sixth region of Africa. So how should Africa be engaging? How deliberate should Africa be now in terms of engagement amidst this weakened trade governance and weakened multilateralism?
Well, firstly, I think we need to strengthen partnership within ourselves first. Intra-African trade is still about 15% of Africa's total trade. I think we need to increase that number because it makes us less vulnerable to global shocks. And when I say Africa, I'm not just referring to the geographical space called Africa. I'm referring to global Africa, which, like you just said, includes the Caribbean regions. When we refer to Africa at Afreximbank, we're also including the Caribbean as well as Africans in diaspora. So I think we need to trade more with ourselves, but also we need to build ties with Asia, with the Middle East, with the BRICS countries, China, India, Brazil. All these regions are still growing. They are growing fast. And they're also looking for new trade partners like Africa, especially now that the traditional rules are changing. So I think that, and again, if we do that, it makes our trading partners more diversified. Again, also limiting risk in terms of vulnerability to disruptions in the global economy.
Africa's merchandise trade rebounded strongly in your reports in 2024 to 1.5 trillion naira, with intra-African trade up about 12.4%. What were the key drivers behind this resurgence that we witnessed, and how sustainable is this momentum in the face of projected trade contraction in 2025?
Key drivers stated in the report. Africa was able to benefit from very high commodity prices, especially gold, cocoa, even coffee. There was greater public investment as well across many African countries. It's also a sign of the growing implementation of the AfCFTA. I mentioned yesterday that, for example, the Pan-African payment system grew by over 1,000% on year. That's to show you that more African countries are actually using the PAP system for trading within the continent. So early gains from the AfCFTA was also a factor, which led to an increase in intra-African trade, double-digit 12.4%, 4%. Also, the support by strong support by African multilateral financial institutions like the Afreximbank, AFC, AFDB. Their job is to come in when there's usually when there's an economic crisis, a global crisis, most of their traditional finance support goes away. And so these institutions, African multilateral institutions now step in and plug that gap. So also because of their support, strong support in plugging that gap, they also prevented significant disruption in African countries. So a combination of their activities, combination of the very high commodity price they took advantage of, combination of increased public investment, and of course the implementation of the AfCFTA, improvement in the implementation of the AfCFTA. These were the key drivers. Sustainability, I think, would depend on doing exactly what allow them to grow strongly in the first place. So that's deepening AfCFTA implementation, expanding trade finance access, and that's where the role of African financial institutions comes in. I think African countries need to continue also accelerating value chain integration in industrial sectors, automobile, agribusiness, and so on. I think if they continue to do this, most of what they have done in the last 1 year, they can continue to sustain the progress that it did in the last 1 year.
How do you think that African policymakers should interpret the figure of the deficit, the trade deficit of $11 billion witnessed in 2024? How can African policymakers interpret that figure? You just mentioned a few bottlenecks that we do have in Africa, but how can they really interpret this figure that the Afreximbank has released in terms of trade deficit?
I think if policymakers, I would say they should look at it in two ways. One is positive. That basically means there's scope for expanding African trade. African business they want to produce to export, but they don't have the resources to produce more. And when they produce more, they don't have the resources to export more. So that's a good thing. It means that there's scope for expanding production in our countries and there's scope for exporting more. All we need to do is get capital for African businesses so they can do this. So I see that as, if I was policymakers, I see that as positive. It means that we have to configure our systems to ensure that we can get more funds, more capital for African businesses so they can produce more and export. So that shows that there's scope for growth, significant scope for growth, as long as we can figure out ways to actually plug that trade finance gap, which is still about $100 to $120 billion. It basically just suggests to policymakers that there's scope for growth for us to, and our current share of global trade is about 3%. There's a huge opportunity for us to grow that share of global trade, particularly, like I said, if we trade more with ourselves and we partner more with other friendlier regions in Latin America, Asia, the BRICS, and so on.
Mm. For us to trade with ourselves and also attract investment, we must reposition ourselves first to be able to attract that trade and investment flows from other regions. The report, discussed something that I find very insightful: friendshoring, and the configuration of global supply chains. So how do you think that Africa can now strategically position itself? Because if Africa wants more money, it must be able to, put itself as a good bride, if not even groomed, or that I'm in charge. Just like what was said at the meetings yesterday, Africa must be developed by Africans. So how can we do that before the rest of the world believes in us, beyond even the primary resources gotten from Africa?
I think that friendshoring that you referred to, a window for Africa to attract manufacturing and logistic functions, relocating from should I say risk-prone areas. So I think Africa needs to position itself through, and that's what Afreximbank is supporting, through industrial parks, through trade corridors. For example, the Lobito corridor. Also, policies need to be predictable. Critical sectors like automobile, agribusiness, textiles, green manufacturing, where we have strong competitive and comparative advantages, where we have both market size and comparative advantage and input advantage. I think that's where we need to focus. If you look at the way the current global economy is being formed, it's been formed into you are now having three blocks. We have the Western bloc, which is largely talking and trading with itself. We have the Eastern
bloc,
and then we have the neutral bloc, where 90% or so of Africa belong. Now, the neutral bloc trades with both the Western bloc and the Eastern bloc, and that makes it attractive. We don't take any sides. So in this battle where the East doesn't want to talk to the West, and you have the neutrals in Africa, for example, that is happy to work with both of them, we become attractive to both sides, and this is the opportunity for us to exploit that advantage, given our huge our demographic advantage, our huge raw materials, critical raw materials are extremely important. I think, again, all these benefits Africa, again, opportunity to play with the West, play with the East, exploit our advantage, and use that as a way to create a more firm structure for economies.
You said something at the press briefing yesterday that Africa, concerning the trade tensions that we saw a few weeks ago, that Africa was not so, immersed in that. It's a blessing. It's not also a blessing, as it were. When you were saying it, I didn't want to ask you a question in that room yesterday because I knew you were going to come on the show today. You were saying, okay, that we are not, we are not affected and all of that. But I also look at it in the way that we are not affected could be a blessing, but it could also not be a blessing for the fact that Africa is not really that developed. That speaks to our development too. I hope you
Yes.
understand what I'm saying, Doctor.
Yeah. That's the strange part of it. Like I said, our lack of development, which everyone has flagged in the past as a problem, is actually what is actually protecting us from being significantly impacted today by the escalation in trade, the trade escalation.
But it's at the expense of non-development, it's at the expense of poverty, it's at the expense of inequality, it's at the expense of not so many jobs for Africans, it's at the expense of a lot of things.
Yeah, I'm not saying that this is necessarily a good thing and that should continue. What I'm saying is that those challenges, those concerns, is what is making us less. So it's more from the point of view of it now gives us an opportunity because we're not significantly affected to actually do exactly what you are saying, to actually create jobs, to actually build an industrial base, to actually use the current global challenges to our advantage. So the point is, because of all these things, we are not as affected, so we can actually take advantage of the crisis to our benefit. Not that it's not that we are saying that we should stay the way we are. It's essentially saying we're not going to be as affected because we're not really integrated in the global economy, and because we're not affected, we have the opportunity to now take advantage and actually grow our economies, produce more, develop our industrial sectors, export a lot more, generate more revenue, more foreign exchange, build our economy, so that by the time that this crisis is over, we now have a more structurally fixed, aligned, and strengthened African economy. So that's essentially the point. Not that we should stay in the current situation where we are exporting raw materials, where we have no industrial sector, no real industrial sector, where we have no jobs for our people, where people are poor. No. I'm just saying that's a reason why we're not going to be as affected. But the point is not to stay exactly in that situation, is to take advantage of it, to develop our economies and make them stronger. Essentially, the point is don't waste the opportunity of the crisis that has been created, and the fact that we did not fix our economies in the past is helping us now. But if we don't use the opportunity to strengthen our economies, by the time the next economic crisis happens, it might not afford us the same opportunities as it does right now.
In the report, you noted that global inflation fell in 2024, and for Africa, it rose to 20.1%. What explains that rise, and what does it also say for the transmission mechanism inflation transmission mechanism across Africa, and what explains that divergence that we're seeing? Global inflation falling. We were told that, in fact, the IMF released the report, I think, was it earlier this year? Yes, in April at the World Bank IMF spring meetings I attended. Last year too, they also mentioned it in October. So the whole world, the rest of the world, inflation is falling, but yet inflation, it's, the other way in Africa. So what explains that divergence? And what does this also say about inflation transmission mechanisms, where we've seen monetary policy come out frontally to be able to bring down inflation, but yet it's still high? Take a look at the case of Nigeria.
I think for our economies, unlike more of the advanced economies, our economies are largely cost push. They're largely as a result of structural issues, and unfortunately, first of all, it's a combination of both. There's cost push and there's
Demand
money
pull.
supply.
Okay.
So because all that monetary policy can do is to pull out the excess funds in the system, but it gets to a point where that's no longer the problem. The structural parts kick in, and from that point, there's nothing monetary policy can do. So our economies focus on monetary policy, it works up to a point and then it stops moving. When you get to the point where it stops moving, that's a clear signal that it's probably not excess money supply that is driving inflation. It's probably more structural inflation drivers, which continue to remain entrenched in our economies. So that the divergence rather that we are seeing is really from currency depreciation, this supply side constraints that I mentioned earlier. Many of our economies are also highly import dependent. So as a result, monetary policy transmission lags. So unlike developed economies that can benefit from rate cuts, many African countries, they are faced with imported inflation. They are faced with structural production challenges. They have weak exchange rates. They have high logistics costs. All of these things is what keeps Africa's inflation rate high relative to more developed economies. So until those structural issues are fixed, until the ease of doing business, the cost of production is fixed, they will not be able to benefit from slowing inflation that we see in more advanced countries, where it's really just a case of demand pull, as opposed to our countries that is structural and is cost push.
The report also noted, amidst all of these challenges, the report noted that we're having improved macroeconomic stability across many African countries, and as well as declining debt ratios. Uh, what fiscal disciplines or perhaps key reforms do you think that changed that story? And do you think that those fiscal disciplines will continue to endure across those majority of the African economies?
Well, there will be one or two here and there that are not as disciplined and will still face challenges. But as a group, I expect it to continue, and that's because of many African countries in the last couple of years have been engaging in significant reforms, including fiscal consolidation. There are moves to mobilize revenue. We are seeing many of them restructuring debt. Some of them even with our help at Afreximbank. You are seeing tighter monetary policies. You are seeing improved access to capital markets. Now, many African countries are now going back into the international capital market successfully. They are leveraging relationships from the support of African multilateral financial institutions. Um, all of this is improving investor confidence. So again, capital is flowing back into the economy, direct foreign investment, portfolio investment. So all of this is what is driving that stability in their macroeconomic environment. Like I said, also at the same time, some African countries are actually trading more with themselves as well. And again, all this is reducing vulnerability to the shocks in the global macroeconomic environment. So is this sustainable? I would say, it depends. They would be required to, they have to keep faith with their reforms. It requires discipline. They have to continue the institutional reforms that they started a couple of years ago. I mean, if anything reverses, then of course it will not be sustainable. And they have to be more efficient in spending. We need growth enhancing spending and not frivolous spending. If we are generating more revenue, if a few days ago, was yesterday, I heard that the first quarter we made is up 6 trillion naira revenue,
Yes, for
and the
Nigeria.
first
Yes.
thing I thought was it's not really the revenue we generate; it's actually how we spend it. That's the most important thing. Because it depends on how we spend it, and that's what's going to determine whether the revenue generated was matters or not. So again, that's the same point. Growth enhancing spending. If we keep doing this, we will just continue going from strength to strength. And these are kind of some of the recommendations that we try to make for African countries in this report.
The report also estimated that there's a trade finance gap of $100 billion annually for Africa. The report also noted that Afreximbank disbursed about $17.4 billion dollars last year, aiming to double intra-African trade. But the question to you would be, how does this capital reaches the real economic actors, even beyond large companies and governments? How?
Well, 80% of our economies in Africa are micro, small, medium scale
Yes.
enterprises with the money. If countries do not develop it doesn't matter how much money you transfer to a country has capital country. If it doesn't go to the people that need it, the actual business, the one that actually would grow and drive your economy, then it's not going to matter. So we have to go beyond just disbursing huge figures. We have to ensure that we target those that actually need the capital, and that is essentially small, medium scale enterprises. I think individual African countries have to understand they have to develop a system aimed at ensuring that capital gets to this segment of the economy. Unless they do that, the trade finance gap will remain. Unless they do that, the impact of all the disbursements will be very minimal and not much will change. So I think that's the target. Each country understands its own the way their micro, small, medium scale enterprises are set up in their countries. They know the sectors they play in. They need to. I remember when I was in one of the reasons when I was at the National Bureau of Statistics, we started the process of just before I left National Census of Industries and Business. The objective was to do exactly this: go across the country, every street, every corner, and then record all the businesses, whether small, micro, small, medium, or large, so that government can use that data, that information. Now we know where they all are. We know the sectors they operate, we know the size of their operations. Then government can craft strategies to target them, give them support, including making things easier when it comes to getting capital. Until they get that capital in a simple way, then they're not really going to be. They're not really going to be able to move micro business to small business to large, to large, and so on. So it's onto that capital is until you find a way to ensure that that capital gets to them. Really, you're not going to see much change in terms of the way our economies in the continent operate.
The report argues for greater financial sovereignty through African-led institutions. And when I was taking a look at the report, my mind did come to this question, which I want to ask you now. How can central banks across Africa, as well as DFIs, that's development finance institutions, work more cohesively to build resilience in a post-dollarizing world? I listened to Yemi Kale yesterday, the central bank governor of Nigeria. He did speak about resilience, that our institutions need to build resilience. How? And let me also add this very quickly. Yes, let me add this because it's connected. Africa now has a seat at the G20. In practical terms, how can we use this platform to advocate for more meaningful changes, especially around global financial governance?
Okay. I think African central banks must scale local currency settlement systems. They need to expand central bank digital currencies. They need to deepen our capital markets that are still relatively shallow. So we need to invest more in our own payment system, use our local currencies to trade more, grow our capital markets. I think that is the first stage. Also regarding African
Sit at the
DFIs,
table. Yeah. Okay. Yeah.
they have to be recapitalized. Now, this African multilateral financial institution, their job is to support African countries by providing funding, but they can only provide funding if they have that funding. So they need to be capitalized. They need to get a lot more funding so they can do more. So we need African recapitalized maybe by African institutional investors so as to reduce dependence on foreign flows. For example, assuming 40% of an African multilateral financial institution is funded by the US, for example, and the US decides to pull out funding, similar to what happened with UZ and so on. You can imagine how it's going to impact significantly operations. So we need our African multilateral financial institutions to be capitalized by African institutional investors, by African governments to reduce their dependence on foreign flows from outsiders. G20 is a plus. I think we have to be very careful that it doesn't become we're just happy to be sitting down with the boys. We go to those conferences. We're happy to
big
be.
Boys, yes.
It's just a matter of going there and sitting down and being happy that we're part of them, and that's it. I think that's not the objective. I think we need to use that seat to demand a reallocation of SDRs, things that benefit the continent. Use it to demand access to global climate funds, for example, even though they are there, African countries are really not tapping into them, but there's a lot of restrictions against African countries that need them, getting them. Um, the next one I'm more passionate about. I think we need fairer credit rating frameworks. I think the current global financial architecture, particularly as it relates to credit ratings, is not in the interest of Africa. It's biased against our countries, and I think it's partly because they don't understand how our economies work. I think, and then they unfairly rate us negatively, which makes it harder for us to get credit. So I think there's a need for fairer credit rating frameworks. I believe they should use that seat to also demand more inclusive global financial regulations that benefit Africa. The current one works against the continent. I think also this is more related to Afreximbank. I think it's important that they use that G20 seat to insist on recognition of African multilateral financial institutions preferred creditor status. This is a status that is afforded to other international financial institutions. We have African institutions have this in their charter, in their law, but sometimes some of these countries choose to ignore that. I think they again use the G20 seat to insist, recognize preferential creditor status that African multilateral financial institutions have. So it's a way for us to use this to redefine the global financial architecture in Africa's favor. I think that it should be a coordinated approach agreed by all African countries. We should have a strategy in those G20 meetings where we are going to present Africa's position and requirement. It should not be seen as, like I said, just one of those meetings we go and take pictures and nothing is done.
Okay.
Use it for, yes.
If, as we round up, if you were to distill the 2025 reports that you have published into one urgent action for African leaders, what will that be? That's one. Then number two, how optimistic are you really about Africa if we can indeed convert today's global disruptions into a launch pad for perhaps more sovereign, digitally integrated and value-added trade structure? One urgent action for African leaders distilling from this year 2025 reports. And how optimistic are you about Africa if we can indeed take today's challenges, today's disruptions, launching us into a more value-added continent, into a more digitally integrated continent, and a more sovereign continent?
Right. I think that if you look at the theme of the report, I think what we found out when we are doing the research is that the importance of finance. So if I was to, I would say the most single or the most urgent advice I'll give to African leaders is that it's very important that we close that trade finance gap. It is extremely important. We found the importance of capital in developing our economies is huge, and so for now we are heavily dependent on external sources. So it's important that we close the trade finance gap. Without accessible financing, even the AfCFTA cannot even try. We need to finance our MSMEs, like I said again, that's tied to ensuring that there's finance. We need to upgrade logistics. We need to harmonize our regulations as a continent. Prerequisites for unlocking. There are prerequisites for unlocking Africa's trade potential and ensuring that our economies grow faster and develop faster. I'm optimistic, but I'm also a realist. So I'll say that I'm cautiously
optimistic,
but reasonably. I still believe that the current challenges in the global economy, fragmentation, for example, I think it creates risk. I understand that, but I think it also creates unprecedented opportunities that we can exploit. I think if we can scale things like our payment system, for example, the Pan-African payment system, if we can complete the AfCFTA implementation, move all these rules and regulations that is preventing us from trading more effectively with ourselves. Well, Africa is actually seen like one country. For example, if I want to sell something, if I want to trade between Abuja and Lagos. There are no rules holding it. I just send my things to Lagos and I can sell to somebody. If we treat Africa like that, where we can move goods, services across the continent without different rules and different borders and different tariffs, non-tariff barriers, Africa is like one country. If we can do that, I think that it will help the continent. But like I said, I'm cautiously, resolutely optimistic. I think we also need to strengthen our African multilateral financial institutions. They are the ones going to develop our continent, not the foreign ones, not the international ones. We should concentrate more on African, develop the DFIs. And again, like you said, we should use our G20 voice wisely. If we do all of this, I think the continent can transition from vulnerability to strategic relevance.
Okay.
Have a huge opportunity, and we should not miss the opportunity because we might not get another one.
I want to say thank you very much, Dr. Kale, for joining us this morning. Of course, taking a little bit of time off because I know that you are so involved in this annual meetings. Thank you very much. I hope to see you later.
Nancy, I'll see you later. Thank you.
Thank you. All right, I've been speaking with, of course, Dr. Yemi Kale, who is the Group Chief Economist and the Managing Director of Research at Afreximbank. A good conversation there, helping us understand not just the numbers, but the story behind those numbers, the challenges ahead, and of course, the gains and the road ahead for African trades. Thank you for making it up to this minute watching the video. Thank you all. Don't forget to subscribe to our YouTube channel, Moneyline with Nancy TV. Like, follow all our other social media platforms where we keep you up to speed with fantastic interviews, as well as markets, personal finance, business, and economy information. This is the best place to be. I'll see you all again in the next video.